Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 20th of October, 2021. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Quick mic check, please. This is episode number 2098, where it looks like we're going to hit 2100, episode 2100 on Friday. Can you believe it? It's been 100 episodes since we did the TB 2000 event, if you guys recall. Anyway, this morning, really a neutral market. Things are kind of lame. Looking at what we've done here, we've got a market that's sitting sideways. The S&P is balanced. The indices are really hovering around their settlement price. Looks like the rally is taking a break. Although the close yesterday was pretty bullish on the Nasdaq and on the S&P, as it was on the Dow. Not so in the Russell. Despite that, we've pushed higher overnight and have been sitting sideways since then. As you can see, the S&P is only a couple ticks above its settlement price. Crude oil is also coming off 183 basis points, $1.50, trading at 80 below the 81 mark at 80.92. Gold a little pop higher today. Silver remains strong, and Bitcoin is at $65,000. As you may have heard, the ETF, ProShares ETF, traded yesterday, and it was the largest traded over $1 billion. It was the largest ETF launch, the second largest ETF launch in history. So that's a lot. There's a lot going on there. Ether is pushing up against 4,000 again. As far as earnings, which are the key thing that the market's watching currently, we had Verizon, Anthem, Baker Hughes, Biogen, Northern Trust, and Abbott as the key releases. There were many. There was a long list, and I only filter out companies that are $1 billion in estimated revenue or better. And overall, these companies across the board, I'm just refreshing to see if there are any more releases since I did my prep this morning. Looking at this, strange it's not updated, but those are the key figures, the key releases. Pre-market, after the close, we have Tenet, PPG, Las Vegas Sands, Discover Financial, CSX, and IBM as the key releases as well. In terms of the calendar, we have crude oil inventories. I know that I think a lower tier, it's considered to be a 1-star impact here. We've had a lot today. We've had inflation out of Europe, Great Britain. We had PPI out of Germany. We had the inflation and core inflation out of the Eurozone, and a bunch of others. But we're expecting EIA gasoline stock changes, the crude oil inventories and gasoline inventories at 10:30. We're looking for Evans to speak at 11. We're looking for Quarles to speak at 1. And that's about it. I'm actually not seeing Fed's Beige Book on here. I know that Brian here is saying Fed's Beige Book, but it's not on my calendar. In either case, I'm not expecting that to be a mover. Looking at the auction condition for the ES, the big dog in this game, the ES is completely balanced right now. It's only traded 148,000 contracts. Feels like a holiday. Very low volume relative to prior sessions, well within what we would consider normal. The overnight inventory is 50% short, so 50% of the 50% more of the volumes below settlement. The range is a measly 13.25 points, and the point of control is at 45.11 1/4. Remember, 45.11 is the MC point of control was the key target yesterday, which we hit right on the nose. We'll go over that in a minute. So that's what we've got. Look, based on the market positioning here, we're expecting a pretty sluggish trade today. So this is why we do this homework and we look at the overall picture. It's because it's to prepare us for what to expect coming in. Here's what was expected for yesterday. That's quite a paused face there I've got from yesterday. The primary expectation is a choppy open that pushes down into the 88 area, pushes back up, and is consolidating sideways. What ended up happening is scenario 2 ended up continuing to push higher. Yesterday, I expected the market to stall. Took a short early on that could only get down to 87 and a quarter. And into the 88, but it could not carry through. So the secondary scenario kicked in, and that scenario is looking for 88 back to the overnight point of control, 4,500, a struggle of 4,500, chop at 4,500, and then ultimately to get to 4,511. You can see it right there, 45.11. So 88 to 45.11. That's the range. And I talked about the fact that we need to temper our expectation in terms of range because we are in a rally market and rally markets compress. And I talked a little bit about that yesterday. So here's what actually took place yesterday in our review segment. We open up at 44.93 and a half. We have a very choppy open auction out of range type auction. We push up to 97 and a quarter and then drop through to 87 and a quarter. Remember, we're looking for the 88. And then the next thing we're looking for is if it starts to impulse higher, then we're looking to get long into 11. Here's the 11 right up here. 11. We settled, didn't want a rectangle. We settled at 11 and a quarter, folks. The target was 11, so 88 to 11 is our range, and that was the entire range yesterday. So a lucky guess, but statistically correct. Once we get the impulse up, this is the impulse that I marked for scenario 2. Nothing to do here, but the pullback gives us confluence at the opening swing high, which was right here at 95. Gives us the RTH mid, RTH VWAP, gives us an opportunity for a push on the IB stat, gives us an opportunity for a break of the overnight stat. The overnight high was 45.0450. That gives us an opportunity for both. Pushes through, pulls back almost to the initial bounce high at 03. The initial bounce high was 0225. Pulls back, continues, comes back, and you get another shot at the VWAP right up here back into 1150, and that gets us to our main target for the day. So yesterday, despite the kind of slow trade, we did have a pretty orderly trade. So what has happened since? Since then, we reopened. We had Netflix last night and a bunch of earnings, and we pop right away into the 17 and a quarter, pull right back, and then what we did for the session is really consolidate for the entire session. Something to observe here. We have the full session VWAP, full session mid on top of the overnight point of control. This is on top of a balanced profile and on smaller range and on a on lower volume. This combination here says, hey, I need to back off today. I need to really not be so aggressive today, as the market is already indicating that it has achieved balance. It has achieved nirvana and good pricing, and therefore it is our job as traders to recognize this and back off, and stay off of that, so that we're not committing to or thinking that we're going to get one of these kind of rally days or some of this action here. It's not likely to happen today. We're one of the key things, and this, I'm not going to turn this into a trade wisdom session here. One of the key difficulties that all traders, including prop traders, professional traders, fund managers, one of the hardest things to master is understanding or knowing, getting a clear indication of when not to trade. Most people who don't trade don't do so generally out of confidence, lack of confidence, or a mindset issue or some sort of a psychological issue. They're not trading. Most people are not trading. You know, they're not trading because they're fearful of losing, which is a really tough and counterproductive mentality when you come into trading. This doesn't mean that you should just sling 10 lots in here and not care. It just means that you got to follow your plan, whether you're afraid or not. You need to follow your plan. That's the goal. And one of the hardest things for traders, especially new prop traders, to figure out is when not to trade, when to take the position of not being in a position. And this is the sort of day where you come in with the expectation that it's likely to be a very turbulent or choppy open. And then in that situation, what we're going to do is, we might open or we might do this kind of crap here. And then the idea is I'm not going to act until the break happens. Suddenly we get an impulse. And now I'm looking to trade from that direction. If I'm going to trade from the outside in, if I'm expecting the momentum to build up away from the consolidation, or if we broke into support, then I'm looking to buy some sort of a pullback to balance on a day that is expected to be mean reverting, right? So, but in either case, today is one of those days where we just need to kind of lay off the buy sell button and let the market develop a little bit. This is the best I can offer you, and I'm hoping I'm saving you some money by offering you this advice that even, as I said, even prop traders cannot uh, cannot balance. Look at what we've done here so far. We've run away from the lows at 43.50, and we've put in three um, three gaps. We've really rushed through 150 points worth of prices. We did not really trade in both directions. We didn't close our gaps. These are weak structures below. We've seen these weak structures before. We generally come back and fill them in at some point. It doesn't mean that we do it today or tomorrow, but it may be a couple months. But when this thing gets weak, those weak structures, once it rolls over, those weak structures become good opportunities or good targets. But so far, the market has run away, and yesterday it closed very bullish. Look at that. It closed right at its high, and it's been quite strong. We're one time framing up again on the weekly, on the daily, in line with the weekly. The bulls have it, but today is likely to be a resting day. We've also shifted the point of control for the week to 45.0775, and are holding steady there. So today, it is best to just chill. I want to make sure you guys know that Conversion Trading and I are hosting Anthony Crudele. Many of you know Anthony Crudele from his podcast and show and live stream called Futures Radio Show and Develop Your Edge. And we're going to host him tomorrow at 1 p.m. Eastern. 1 p.m. Eastern tomorrow. You can register at go2ct.pro/Crudele dash event, Crudelli dash event. I'll put that into the YouTube channel as well. This is a midday uh, webcast. It'll be about 45 minutes. And since Crudelli has interviewed hundreds of traders, he's basically the Jack Schwager, Market Wizards author. He's the Jack Schwager of our generation. So we're going to have him on. We're going to talk about the interviewees he has talked to and what he has learned from them, what makes them successful, things like that. I think it'll be interesting. So take a look at that. Make sure you register. Again, go to ct.pro/Crudelli event. By the way, just to update you on this fundraiser, which is still going, still making an appeal to see what traders can do to push the limit on this fundraiser. It is at 3,122. The goal is 2,500. We're at 124%, and we want to see more traders contributing a lot of, I see a lot of names. I recognize a lot of names. A lot of you are anonymous, which is really, really great as well. But we'd love to see you contribute to this to benefit St. Jude's Children's Research Hospital. It is an amazing organization that focuses on curing cancer or assisting families with a child that has cancer with their expenses and care. So please contribute to this if you can. I will post the link for this as well. Let's take a look at what's expected for today. Today's expectations, as I already outlined, not so I'm not so aggressive about what to expect here today. Hang on, setting up the chart. There are some key areas to test. Would love to see this thing pull back a little bit to an accelerated trade, but the bulls have been really on this. So we are trading. Look at the mess that we're in. We are trading right on top of the point of control overnight, on top of the full session VWAP and full session mid, all on top of the MC point of control in the area at 45.11. This is likely to be a very choppy open, so the expectation is chop, 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 chop. Looking for it to dip lower into the prior session's point of control, and then looking for it to push that high. Remember, we had a bullish close yesterday, push that high into what was a double TPO high on September 9th. We have a weak high on September 9th, looking for that to be taken out. That is at 1975. 1975. That's the key target above. A very likely place to go and take out that double top and push to 25. Not expecting more than 25, 26 up here on the buy side if we do continue to push. Now remember, we had a bullish close, so I'm looking for that high to be taken, which was taken overnight, but really not expecting much in terms of range. Okay, this is a small pullback for a continuation in line with the current trend. The secondary scenario is open auction that goes up, tags that 1975.20 area, and then we get an impulse down. We get a pushback to the overnight point of control here at 11, consolidated at the 11, and then start to work ourselves back towards the 4,500. So this is the double O here, double O, and then potentially back into the 95 below. And that's all she wrote for today. Today is expected to be a resting day. I'm not expecting too much in terms of trend or range, and you should temper your expectations. So far, we've only traded 153,000 contracts in this product. It's very light. I think there's low interest at these prices, so it might balance and chop for the morning. Okay. Again, don't forget to register for tomorrow's event, and don't forget to contribute to the fundraiser if you can. I'll post those two links here in a second.